Hello traders, Gary Wagner here at just about 1 o'clock in Honolulu, 6 o'clock in New York. It is Monday, 9th day of November 2020, and this is the daily report for gold and silver. We saw a virtual meltdown in both gold and silver pricing today after an announcement by Pfizer and a German pharma company that said that they developed an effective vaccine that has a cure rate of about 90%, the effectiveness. That sent metals tumbling. They really had a tailwind for U.S. equities. We were stopped out. We'll talk about that during our technical studies, but we did take profits, and that's a small price to pay for the fact that there is now a vaccine. A virtual meltdown in the precious metals markets today, with gold sustaining a major loss, currently down $84 at $867.70. When you consider that it opened at $19.56, traded to a low of $18.48, that's a $108 swing in a single day. Our stops were hit. We took small profits. We'll go over all of those when we pull up our charts. When we look at spot gold, that lost 4.24%, $1868.25, and silver almost a 5.5% drawdown. SLV sustained a loss of $1.29 a share at $22.50. And lastly, GLD is at $175.08, down $8.11. Let's take a look at our technical studies. Traders, although we were stopped out today, we did raise our stops luckily at the end of last week on Friday, moving our December gold stop to $1,918. We originally had the stop at 61. It most certainly would have been taken out at the lows, and as I said, is trading at around 68 currently. In terms of levels of support and resistance, the only thing that I find very, very noteworthy is where the low fell to, which is roughly the 38% Fibonacci retracement. That comes in at 1842. Of course, when we look at our long-standing support trend line, and that would be this line here, we can clearly see that right after the open, it broke below that, continued to trade lower until it hit these lows right around 1845, 1848, and from there, closed just a little bit off of the lows right here. So traders, not only did we break below the 23% retracement, but both the 50 and 100-day moving average. I find it noteworthy that when we look at the lows that came in towards the end of September, they match almost exactly to the lows that we saw today. If we find support here, that's one thing, and the next level of resistance is going to be back to the 100-day, 50-day, and then the 23% retracement. If it continues to drop, the next level we want to look at would be 1817, 42% fib retracement, and a 50% retracement comes in at 1765. That is a deep retracement, but we do have a lot of historical data showing that that was a primary resistance area before we saw gold break strongly to the upside in June. Although the decline in silver in terms of a percentage drawdown was much greater than what we witnessed in gold, a lot of similarities. First one being that it opened just above the 23% retracement, broke below the 50, and then trailed below the 100. However, in the case of silver, it closed just above the 100-day moving average. In terms of support levels, I would look at support at 22.98, resistance at about 25.75. We are currently flat. We entered our silver trade at 24.21. We got out today at 25.70, and we'll post the exact amount of profits per COMEX contract on the members page. Unlike gold and silver futures, the EFT trusts, GLD and SLV, close on Friday effectively, and then they open on Monday with no trading during the weekend. So when we look at Friday's close and compare that to the open of today, there's a very large gap. Your stop, no matter where you put it at, would have gotten you out on the open today, and the open was at 176.42. SLV also gapped lower on the open today. You can see the gap right in here. So traders, you would have gotten stopped out, but stopped out on the open at 22.78. Traders, if you recall from Friday's show, my opening letter along with my closing comments talked about the fact that until we get an effective vaccine, we will see gold move higher. I strongly believed it then. I believe it now. But with the announcement of a vaccine, I didn't expect to come this quickly, although I'm very pleased to hear that. On today's show, we want to look to see if there's any major chart damage, and what our next move is something we'll talk about through the rest of the week. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the next daily update and review. Bye-bye.